Thank you for joining us.
Michael,
can you give us an overview of the key financing challenges that the FPSO sector is facing today?
Well, I think it's right now it's a combination of a high demand of FPSO financing, driven by the high demand of FPSO deployment, plus the the financial kind of uncertainties in the banking market, in kind of caused by the Eurozone crisis. So we can see that there's on the one hand is a high demand, on the other hand is a kind of a increasingly like a shallow kind of in terms of the depth of the banking market. So there might be some. I think next few years probably there might be some challenges in getting financing arranged, particularly for those large vessels.
Given the relative enormity of these challenges, can you share some ways to mitigate its impact?
Well, I think there are a few, ways of to mitigate that. I think one of them is to kind of tapping the kind of a slightly unconventional like source of funding. For example, the multilaterals, for example, IEC, and then the development banks, etc. So, but these have to be geared towards more developing countries, or maybe some other, so that's sort of funding. The other ways to hedge this is probably to look at, the other ways of funding. For example, maybe a bond market, or maybe a kind of innovative way of financing it. Or some other ways to finance this is the upstream partners may internalize their FPSO kind of financing. That means by acquiring it, So that's a different way, but kind of a very specific on each situation. There's no kind of a panacea for all the challenges. Yeah.
Now, you mentioned bond market as one of the possible areas where we can tap. Some reports actually indicate that because of the rise of FPSO demand, alternative finance options, that includes privately placed bonds, mezzanine finance, third-party equity, will complement traditional bank finance options. What are your thoughts on this? Can you talk about the pros and cons of these alternative finance options?
Yeah, these are not kind of a traditional way of getting FPSO financing, but the traditional way, as you said, is the bank financing, because the bank is the advantage of the bank financing, bank loan financing, is the banks know the market, know the players, and then they can structure a deal, and then they kind of very well educated on the risks that they're getting into. On the bond market to the countries I think it's less of being informed and being familiar with the sector. However, I think there's a huge potential there, particularly on these long-term pension fund, insurance company, that they would like to prefer a long-term steady cash flows, and then actually the FPSO financing is actually a good product for them, investment product for them. So therefore, so I think that involves a little bit more kind of education, a little bit more kind of a brand, kind of a marketing for the sector, and then to get kind of broaden the investor base. So that would take some time. That's one. Number two is probably the bond market will react to bigger players more than the smaller players. The market is right now is a little bit fragmented, so the smaller players, they probably face more difficulties. For other financing, mezzanine debt, etc., equity, there are many private equity firms out there and looking for equities, looking for opportunities in equity and mezzanine debt, but they tend to be expensive. Yeah.
Now, as a key stakeholder, and in fact one of the leading drivers of the industry, can you talk about some of the key criteria that you're looking at before investing in any FPSO project?
I think the first thing first is on the credit risk of the FPSO financing. I think the lease contract is the single most important contract to determine bankability. So I think the experienced negotiator would be required on both sides to make sure the risks are properly allocated, and then the deal is bankable. So that's the bankability, I mean, the financing, the risk allocation part of it. And then among those risks that we are looking at, we look at the credit risk of the off-taker, who is hiring the ship, the vessel, and then what risk are we taking? The lender are not ready to take any reserve risk on this, so therefore, or even some operation risk, but not too much. So I think there will be covered from different parts. Of the puzzle. For example, what a lender would prefer would be a parent company guarantee to the the charterer, and then probably another as the EPC contractor, they will be covering the equipment risk, and then the operator, they cover the operation risk. So therefore, I think the bank, we wanted to see that these risks are properly allocated, and this is not the risk that the banks should take too much. So it's some of them, yes, but not too much. So I think nothing can substitute a well-negotiated deal. Nothing going to substitute a good quality of the credit. Yeah.
Right. Now, Michael is part of the leading private sector investment firm in the world and a well-respected voice in the industry. How do you see the FPSO sector would evolve in the next couple of years?
Well, I see it in the next few years, a couple of things. One, there'll be more and more demand for FPSO. The demand forecast is based on, the oil price assumptions. The World Bank have its long-term oil price forecast around like $80 to $90 per barrel, and then based on that oil price deck, we assume that the deep offshore, the offshore production will continue as it today. So there's be more demand for FPSOs, particularly those in deep offshore, where, for example, Brazil and then West Africa. And then the FPSO is the preferred option, therefore there's more demand. Second, I see the industry will go through some consolidation in the next few years. The current sector is fragmented and need consolidation in order to build a healthy sector. I also see some delays in orders and then cost overruns, simply because the shipyards are very busy because of demand. So that's another trend I see. And the fourth one I see is on the financing side. Larger, complex, and deep, particularly those deep water FPSOs, tend to have difficulties in get financed. And then that's because of as I said, the depth of the bank market, so the bank loan market. So therefore, some effort or maybe some kind of a thinking out of the box is probably needed on each individual deal. And then as a investor in the FPSO market, and also a development bank such as IFC, we're always looking for such opportunities, particularly in those developing countries, and to help those FPSO financed, which will be a critical part of some developing countries' economy, and then the fiscal revenue, etc. So I think the IC as one of the multilateral banks is always considered as a bank of the last resort.
Very well said. Thank you so much, Michael, for your insights for today. Really appreciate it.
It's a pleasure. Thank you.